Hi, welcome everyone to this incredible panel. And thanks to the London Tech Week for inviting all of us to join in this event and to have this conversation. Let's begin with an understatement. Over the past decade, China's tech industry has rapidly expanded, and many Chinese companies have emerged as global innovation and sector leaders. What has been most fascinating and actually shocking to some is that these Chinese companies are no longer copycats, but have rather risen to leadership with entirely new and groundbreaking creations. Even in derivative industries like in smartphones, Chinese companies have reinvented their way to the top. Technology has always played an especially key role in China's political, economic, and social developments, and especially so in the past decade. But that close relationship has swung the industry from dividend to debt. Now, earlier this year, Beijing unveiled ambitious new strategies and regulations to bring the country's technology development into alignment with national priorities, shaking the foundations of a massive industry and, in effect, roiling the global markets. A wide range of government bodies have since taken to drafting new regulations and initiating campaigns that are designed to kind of clip the wings of big tech. These, of course, led to the Ant Financial Group's abandoning of their IPO, an enormous antitrust fine against e-commerce giant Alibaba, Tencent Music being forced to relinquish exclusive licensing rights, a cybersecurity probe into ride-hailing giant Didi Chuxing, and by effect, a death warrant for the entire private tutoring industry. The barrage of bad news has done a number on tech companies and their stock prices. In this year alone, we have seen more than 1 trillion US dollars wiped off the exchanges, leaving rattled investors trying to guess what regulators might do next. Now, this latest effort in tightening control over the digital economy includes the world's first draft regulation curbing the use of recommendation algorithms, which is the primary engine of growth for most digital content platforms. And there are even new video gaming rules that are now in place, which limit playing time for people under the age of 18 to just 3 hours a week. Additionally, two laws were passed this year that govern data use, the Data Security Law and the Personal Information Protection Law, which are also expected to have significant impact on how internet companies operate. So all that said, once we look beyond those headlines, there continues to be plenty that we can and should learn from China's internet sector. It's the largest in the world with almost 1 billion users. Now, this is, of course, a new phase, tightening regulations, an increasingly saturated domestic market with shifting demographics, geopolitical tensions. All of these things have led to rapid pivots in business models, a focus on completely new customer segments and completely new markets, and the evolution of corporate structures and narratives to capture new funding opportunities. So, this is the new world. But how does one succeed in this quote unquote new China? We have a lot of ground to cover in today's session, and I'm so fortunate to be joined by an incredible group of esteemed experts. So, a warm welcome to our panelists, Mr. Charles Lee, who's the founder and chairman of MicroConnect and the former chief executive of Hong Kong Exchanges and Clearing Limited, which is the Hong Kong Stock Exchange. Ms. Ray Ma, who's a Chinese tech analyst and the creator of the must-listen-to Tech Buzz China podcast. And Ms. Edith Yun, who's a general partner as Race Capital, formerly a partner with 500 startups focusing on China, and South China Morning Post partner in creating and distributing the annual China Internet Report. So with all of that said, let's dive right in and let's start with a topic that continues to dominate headlines, which is the China-US tech war. Now, sometimes it's portrayed as a battle over who will lead the future of global technology. This conflict began as a trade dispute during the Trump presidency, but quickly transformed into this seemingly all-out battle for leadership in core technologies like 5G, AI, semiconductors. Now, a phase one trade deal between the US and China was signed in January 2020, although relations have not significantly improved under Biden. And 7 months into this presidency, his administration has yet to establish a policy on trade with China. On the other side of the Pacific, China has seemingly leaned their full domestic weight into decoupling, whether it be in manufacturing, research, the supply chain, or now capital markets. So, diving right into this, Raymond, I'm going to start with you. Do you believe that it is appropriate to characterize what we're seeing between US and China as a tech war?
I think it's a little sensational. Uh, I guess I've just heard people use the word so much that I've started adopting it myself. But if I were to remake it from scratch, I might not call it a war and just say it's really a competition. War makes it sound way too violent.
So, within that competition, then, Edith, what are the key sectors that China and the US are actually competing in? And downstream, is that going to lead to kind of a bifurcated global tech industry?
Well, just to start, I think I agree with Ray. I hate a word like war because, in some sense, I don't think technology investment is a zero-sum game. Just because in China, most people use Taobao, Tmall, or Pinduoduo. No one in the U.S. uses it. Maybe sometimes I will text Ray or Gary use WeChat, but we're rare, right? So most of the people in the U.S. don't even know what WeChat is. So in some sense, there's definitely a lot of comparison. But the reality is that just because there's more things going on in China or vice versa in the US, doesn't mean that any Chinese citizen would just move to the US just because there's better or whatever other technology there's out there. So obviously, most of the media would love to sensationalize what's going on with war. And obviously, there's competition, and a lot of politicians like to sort of like paint it that way. But the reality is, I think, is a parallel universe. The way that you develop AI in China is just very, very different. In fact, most of the law in San Francisco, you can't even use CCTV. So there's no really a competition because we basically utilize the technology in a really, really different way.
Charles, I see you nodding your head. Do you agree with both Ray and Edith in that characterization?
Yeah, broadly, but obviously people use the word tech differently, referring to different things. When you use tech to mean technology as an application in real life, whether that's in e-commerce, social media, and all of that, I think clearly the two markets are so different, so big independently already, and they're going to have their own logic and their own and development that are very different and that are rarely in conflict. But when you use the word tech to refer to certain core technology development, and particularly in semiconductors, then there is clearly a level of rivalry that is going on because because China has believed over a long period of time that development like that will be shared and will ultimately be applied by everybody, and will allow a market to to trade those and with the prices and to be reflective. I think the last administration's control over technology in that space really create a confidence crisis in confidence. So now everybody think, at least on some of the core technologies, you need to be a little bit more independent and self-reliant, and that probably in the end is not a great development for technology for humankind, but it is and nonetheless a geopolitical issue that we all need to reckon with.
Yeah. Can I add? Yeah, I was just gonna say for those in the audience who are not familiar, China calls these choke point technologies, and they are very much it is very much a military term, and the idea is very much that if the U.S. or other countries, not the U.S. doesn't own the patents or IP on all of these technologies, but if some other hostile nation were to cut off access, then it actually really cripples an entire supply chain, right? So for semiconductors, for example, China does know how to create certain parts of the technology stack, maybe not to the level that the West has, but then there are some parts where they have complete gaps, right? So if the US, for example, came in and said, we deny you access to this, then the entire supply chain is disrupted. And I think it's not just the trade war, but also COVID that made China and the government really realize that self-sufficiency is really important, right? So, with the trade war, it's maybe some hostilities, but with COVID, it could be just a, natural disaster that prevents that prevents, the flow of goods or services or talent, and that could really cripple or decimate, an industry.
As a member of the media, I would agree that there is some sensationalism to the way that that some folks in our industry characterize what's happening. But I think the reality of competition can't be ignored. The separation of the app ecosystem that we've all referred to, not all of it is by choice. The Googles and the Facebooks of the world are not able to operate in China, that has, over the course of the last 2 decades, created a breeding ground and fertile ground for these domestic tech giants to become not only the only incumbent players, but now increasingly global players. And so even if we ignore the separation of the domestic markets, whether by policy or by practicality, there is competition in other markets, developing markets, especially now, across Southeast Asia, across parts of Africa. We are seeing US and American companies compete. Even in developed countries, we see hardware competition. The entire uproar over Huawei over the course of the last several years has everything to do with the fact that governments right now are being forced in some ways to choose between a Chinese hardware manufacturer to build out the next generation infrastructure for their countries or the incumbent American manufacturers. So in that sense, that competition, I don't know which of the three panelists would like to jump in, but where do we see that ending? Are we going to see more and more years, maybe a generation of competition as the rest of the world develops and catches up to these two huge domestic markets? Or is this just a political moment, and are we going to see greater collaboration and cooperation down the road?
I can say something real fast. I was just in a panel. Actually, it was supposed to be about US and China. Or sorry, it was actually supposed to be about China tech, and it kind of devolved into this conversation. It was a European panel, primarily devolved with complaints about US tech hegemony. So I would like to say that, I think as someone who grew up in Silicon Valley, and very familiar with Silicon Valley giants, it had not occurred to me until like the last 2 years, really, that other people in not just China, but much of the world they're not being necessarily forced to use American products, but that is the current state of affairs, right? That American products really dominate, and we see that with Chinese companies, they are. In a sense, fighting back, right? Because if American companies own all of the distribution channels, own all of the digital platforms on which all information and goods, right, are flowing, and payments, etc., then what happens, as we saw earlier this year when Amazon, for example, and Shopify banned a lot of Chinese merchants? I mean, they banned it for really good reasons. I don't want to, make complaints about that. There were very legitimate reasons, but there were also some merchants who claimed at least that they were banned and shouldn't have been banned. Then for them, they're now searching for, more friendly platforms on which they can put their business. And that's what I see happening. And if you ask European, companies, they're like, well, Americans have dominated the internet for as long as we've been using it, and then now there are all these Chinese companies coming in, and so we're thinking, well, why can't we have our own platforms, right? We also have the technology, and we are also collectively a really large market, very large lucrative market, so there's no reason for us not to propose an alternative. And I kind of see that happening. So when we talk about, quote unquote, the splinter net, I might be on the side of people who say that, well, the splinter net, it's not a matter of whether or not it's coming. It's already here.
Yeah, and I remember a couple of years ago when all of us can still travel, I was at a Mobile World Congress during the Trump years, and there were U.S. government employee literally trying to, in Spain, trying to tell people don't work with Huawei, and to a lot of the European or the rest of the world actually found it very strange. Just to begin with, Cisco actually never even bothered to work on 5G network and the technology. And in fact, if it's not Huawei, you have to think about Ericsson, Nokia. It's not even Cisco. So in some sense, I think, and then Gary, you also talked about sort of the rest of the world, right? They have to pick and choose. Yes, they do have to pick and choose. In India, I remember the first time I went there about 10 years ago, I was seeing like TV advertising for WeChat in India. And the Baidu and Alibaba have been in that, well, until recently because of political reasons. So many of them basically got pulled out of the App Store. But Asia, I felt like most of the Southeast Asia behavior in terms of how they use chat app or shopping or a lot of these travel behavior are actually a lot closer to the Chinese culture than the US culture. So just talking to most of the game developers in Southeast Asia, they take their heads off of Tencent. They just want to learn what they have done. So in some sense, of course, we're speaking to a lot of friends now in London. I actually feel like a lot of the UK, super global citizen, and probably look at it a little bit differently than how most of the US, dominant centric media will look at it. And you'd be surprised like how the rest of the world, especially from the technology point of view, they actually really, really want to learn what Alibaba or Tencent is doing, not necessarily Amazon or Facebook, because it's just so American and developed. And a lot of times when I go to Southeast Asia, the way that they will talk about themselves, I'm the Pinduoduo of whatever, or in Brazil, not the Amazon of X. So I think the
Yeah,
world is changing.
yeah, and I think that that is a perspective that is lost on many people, even tech insiders in the Western world, and it's something that I also have personally observed over the last few years that really has changed the way that I understand the world. I do want to get to the China tech startups themselves in a minute, but there is a very important thing I want to touch on first, which is something that is actually happening that seemingly is going to decouple the countries further, that Charles is pretty much the best person on earth to talk about, which is the fact that we're going to start seeing less and less Chinese companies going public on international capital markets. It has been reported that China is framing up rules to ban internet companies who possess data that they deem to be potentially security risks, national security risks, from listing outside of the country. Of course, that includes the major stock exchanges in the United States and in London. Now, Chinese regulators are specifically targeting tech firms with user data. And there are plenty of Chinese companies with user data that are very, very close to IPOs. So more and more companies are now going to come to Hong Kong, likely to list. And we have the former chief executive of the Hong Kong Stock Exchange here. So Charles, I have to put it to you. Do you believe that this is actually happening? This decoupling of the capital markets is actually happening, and what does that mean for Chinese tech companies? What does it mean for Hong Kong?
Yeah, I think clearly in the short term, there will be a lot of pauses, and people will be thinking about implications of the latest development. So that probably there will be a short term, kind of a pause on that. But I don't really think in the longer term, ultimately things will fundamentally change because China has never officially allowed anybody to go to the U.S. to list, and in fact, one of the reasons many go to America to list is because they couldn't do it in China, or they couldn't otherwise do it in Hong Kong, and America is the only option. Obviously, there are many other companies who choose to go there because of the valuation, because of the familiarity of the industry, because sometimes it's still new in China or in Hong Kong even. but I think in the end, people are making a little bit too much out of what the government can or cannot do. We talked about the war earlier. When you use the word like a war or conflict, that usually is sponsored by sovereign nations or governments. And but tech, um, new economy, capital market, technology, people wanting a new way of life through the internet, all of this are likely to be borderless. All of this are likely going to be politically agnostic. So I don't really believe that there is a whole lot that ultimately is going to be so. This is China, this is America, and because most of the big tech giants in China are not government owned, almost none of them are government owned, and similarly in the U.S. So the government will do what the government do for political, geopolitical reasons, but in the end, industry, commerce, market, finance, capital will flow reasonably freely with short-term disruptions, as we can see now. But I don't personally see this is going to fundamentally change. And the Chinese domestic market will, in turn, be a lot more liberal, a lot more deregulated in the sense that allowing many of those tech companies who otherwise wouldn't be able to list in domestically. And Hong Kong obviously is that good middle ground, and they're not as difficult as in domestic market, but they're clearly also not as easy as a disclosure market in the U.S. So people will still find their natural destination, and we have talked about this kind of a change many times in history, but ultimately things move on. The market is going to behave, is going to do whatever the market always does, and to go wherever there is a reason for them to go. So I wouldn't really personally worry about it. And whoever is the short-term winner or loser is largely irrelevant in history.
Well, for capitalists and globalists, that is certainly a very encouraging message, Charles. Can I ask a follow-up question? I think even if this is just a sort of a momentary blip, and we go back to quote unquote normal in a year or two, do you think that there is going to be a lesser of a reliance on American capital?
Well, that trend has always been, in that direction. Not only because it's actually is going into that direction, even with a clear, visible increase every year of additional American capital committed to Asia and committed to China. It's just simply because other money from other sources, particularly money from capital from domestic market in China, whether they stay in China or through all the Connect programs into Hong Kong, or much of the capital that has already come out of China, the size of that is increasing so much so that even with increasing American capital committed to China, and the overall size of capital just have gone so much so, and Chinese companies are much more or less reliant on U.S. capital than it ever been, despite the fact that more U.S. capital is continued to be pouring into the sector.
Ray, I'm going to come to you and ask what this all means for the Chinese companies that were so close to IPOs. What do you expect that we're going to see over the course of the next year? Is it really going to be a pause, or are people going to find new ways to get to large amounts of funding?
Well, this is really interesting. I was just listening with great interest on what Charles was saying earlier. But my understanding from talking to some, companies that are at that stage is that they're still waiting for the rules to unfold. So they might be a little less optimistic than you, Charles. I think I should forward them this presentation so they can get, rolling again on their IPO plans. But yeah, my understanding is that in the near term, let's call it the next 6 months, people have largely paused their IPO plans so that they can figure out what the regulatory situations are going to be. Because again, the main one being that data security law, which just came into effect on September 1st, right? So no one has really gone through the full investigation yet. It's a 30 to 45 day investigation, not investigation, approval. So yeah, we don't really know what's going to happen yet. I think it's going to be at least, Q4 before people start really rolling again.
And Edith, has that created a frothier venture capital market then, in China specifically?
It depends, because definitely not so frothy for education. I was actually looking at the stock price of both EDU, which is New Oriental, and Tao. It's very unfortunate, but both of them have dropped 80 to 90% in terms of share price from their peak. So it really depends on like which sector that you're looking at. Obviously, anything related to hardware and chipset, semiconductor is doing amazing. Education not so great, and anything sort of like related to sort of commerce or news or like things that we've been seeing that is not so friendly to some of these big platforms like Alibaba or Pinduoduo or Meituan. I think a lot of the startups are in a wait and see attitude in terms of what's going on. As Ray mentioned earlier, and I love all the Charles and all your comment about how you think about IPO. In some sense, I'm born and raised in Hong Kong. I'm actually, in some sense, Hong Kong was already the #2 in terms of number of IPO in 2020. And Huaishou, which is like the largest IPO of last year, was listed in Hong Kong. So as a Hong Kong person, I think it's great for Hong Kong. You don't necessarily have to list in the US. I remember, even though I don't often wanted to promote competition, but the reality is, the US stock exchange and their team have always been super active in China, sort of holding on and say, hey, when are they ready to go public? And I think now it probably everybody are just wait and see what's going to happen in terms of exit and IPO.
If I could add, and there, I think we are all get caught up in the moment, because we think people investing in IPOs are really all the people that matter, and I think we all need to look at what's going on in China in much deeper and more profound manner as to all these regulations that seems to be annoying for a lot of people who committed all this capital to a lot of the companies already on the market. But sometimes if you take a pause and try to understand the foundational logic of behind all of this, and I hope that people will come to conclude that this is not about U.S.-China rivalry. This is not about a political convenience, certain measures and regulatory policies to target a certain political element. This is a profound change in China that is trying to essentially create and maintain and sustain the development of the middle class. It's all about creating a society where it's a bigger in the middle. It's like an oval shape. And so that the middle class in China, the largest population, and that is going to enter into middle class in global history, and that is really all what behind all of this. Whether you talk about education, which is really national stress levels for people. Whether you talk about competition, fair competition, whether you talk about privacy competition, whether you talk about fair and mental health of minors in gaming, whether you talk about protecting the vulnerable laboring forces, a lot of that ultimately in the end is evolving around making the society more sustainable and more overall healthy, for everybody. Obviously, the tools, the manner in which a lot of this come, the time, is so packed that people couldn't even capture their breath as to what is going on here. But I think if we just see beyond, what we see on the surface, and that is going to really creating all this difficult for investors, but ultimately China will become a much more investable place and a place that global capital just find no way that they're able to avoid allocating.
And to Charles's point, we've mentioned in this panel already the education sector a couple of times. And for some of the audience, they might not know what's going on in the education sector. So the sort of the brief summary is that just a short while ago, China's central authorities, they overnight effectively banned the entire private tutoring sector. And the private tutoring sector is estimated to be worth about $120 billion, or was $120 billion. That's the size of the marketplace prior to this ban. Now, ostensibly, the reason why overnight the regulations on private tutoring changed was, in many ways, has everything to do with what Charles is saying. It's because that they believe, China believes that education should be a public good, and that these extraordinarily expensive tutoring classes and facility means that the upper crust of society have greater and unfair access to education than the rest of the nation. And this ban was supposedly about equalizing access to education. Of course, those of us who are observers also noted that this came shortly after the release of the most recent China census results, which for the first time showed the flattening of China's population growth. And the primary reason is a startling collapse of birth rates. And when you dig into the birth rates and you understand why parents married couples and people in China are no longer having kids, one of the primary reasons is the cost of raising a child in China. And a big part of that cost are all of these after-school tutoring programs that are necessary to get kids into the right middle school, to the right high school, eventually the right university. So yes, these regulations look incredibly aggressive for observers from outside of China. And to Charles's point, it is really important that people still do understand the underlying reasons for them. Doesn't mean that you have to agree with them, but understanding is the first part of really getting getting to the crux of the issue.
Yeah, I think it's not entirely fair to say that this has all happened overnight. They actually have been signaling this for quite a number of years, but I think it's just have come. The moment have finally come. This is not also about necessarily immediately eliminating unfairness and creating an equal base on education. That obviously, and none of this is going to be able to get it done quickly and right away, because private tutoring, I can always, hire somebody to come to my home. The rich will always, have advantage. There's nothing I can do about it. This is all actually the reason it happens. The ferocity that it has happened has a lot more to do with releasing the national stress. Is create, because it's not about unfairness. Actually, the poor families are not saying it's unfair that all these guys are having it. They're saying, I'm just going to have to work real hard to make sure my kids have it too. They're not really, even the poor parents are absolutely against, this policy, because they think they want their kids. But the idea that the government is able to do this is essentially saying, they're not saying, okay, finally, we're stopping the rich from teaching their kids better than you do. And they're actually saying, we don't have to do all of this. Let's get rid of all the examinations that is unnecessary. Let's all take, allow our kids to go to the playground a lot more, rather than, tied up in classrooms all the time after work. So this is an extremely popular policy for a large segment of the population with kids. So from that perspective, yes, capitalists are not happy. Unfortunately, they were not giving enough time to work this out. But if it's going to happen, probably sometime people argue short-term pain is probably better than long-term pain.
Charles, I'm smiling because I just can't imagine all my nieces and nephews in Beijing and Guangzhou. Now they have so much free time, can't play any game, no after school programs, and hopefully like they're not going to do anything for the nanny, like what we call ayi. Otherwise, all my cousins and friends will go crazy because now the kids have so much free time.
Let's jump into the domestic market and look further at some of these other things that are changing about the tech space. We talked about the new data regulations and how they have affected IPOs or stalled IPOs, but it also means that even companies that are either already public or not even thinking about going public, some of them have to change the way that they operate. So Ray, I want to ask you a little bit about the personal information protection law that was just introduced very, very recently. It's one of the strictest laws in the world for personal data security. And there are very, very specific restrictions on how personal data can be collected, it can be used, it can be managed. I mentioned earlier in the intro that it changes the way that recommendation algorithms can operate. So what have you already seen in sort of changing behavior? And what have you heard about these massive Chinese tech companies having to adapt to these new data regulations?
Well, I think some parts of the PIPL have already come into effect, right? So, or sorry, what I should say is that some parts of the PIPL have already been reflected in other laws. So, for example, um, you know, like it was already highly regulated who can collect data, which e-commerce platforms, what kind of data they can collect, and me as a user, I should be able to have the right to like delete my data, or port my data, etc. All these things actually happened with the e-commerce law for e-commerce platforms. It's just now that the PIPL is now for all internet apps, right? Whereas before it was sort of more piecemeal. And I think most people refer to it, since we are talking to a European audience, as China's GPDR. And I think that the um, goal, in essence, is for China, for a lot of these regulations, for existing technology. So the mainstream technologies, e-commerce, gaming, whatever, social media, etc. They want to catch up to the regulations in the developed West. Right. So that's why a lot of these laws, it's referred to by legal analysts as China's version of XYZ, US or a European law. And then separately, you have actually the algorithm stuff that you're talking about are still in sort of draft format. And that is more for the emerging technologies where China actually wants to take a lead in regulations, right? Because the idea is like, we already know these things, AI algorithms are going to affect our lives in a very profound way. They're unavoidable, right? They're coming. And instead of these other situations like data privacy, where we're lagging behind the, antitrust, where we're lagging the West and we're always having to conform to what the West has already set as standards, we are now going to lead in regulations. And you could argue what the intentions are. Some people argue that the intentions are to give the domestic companies a leg up, because you set the standards. These big giant companies like Alibaba, Tencent have like more know-how in conforming to these standards, have the systems in place to conform to these standards. And then as other countries adopt a version of these standards, instead of being caught off guard, they've already been practicing it for a while. You could also argue that aside from the corporate benefit, that in general, it's just a good idea to be a leader in establishing standards, because establishing standards is a sort of soft power. Right. So, I mean, of course, not everyone is necessarily going to adopt what China has proposed, but assuming these rules are reasonable, and if you read them in detail, they do seem to be very reasonable. They do seem to be very much about protecting the consumer. Then there's a very high chance that other countries look at it and say, oh, that was implemented with success in China. We're going to do some version of the same.
Very interesting point of view there, Ray. Edith, I want to ask you about another change that is happening in the startup world, in the tech world in China, which is a cultural change. There has been a heavy pushback over the course of the last year against this overwork culture, right, in the tech industry, what we refer to as 996, right, working from 9 a.m. to 9 p.m., 6 days a week, has now actually, as of August, been deemed to be illegal by one of China's top courts. On top of that, the Me Too changes, right, that are still happening in China. Most recently, there was a pretty a pretty big Me Too case coming out of Alibaba. We've heard cases coming out of pretty much all of the major tech companies in China over the course of the last year or so. So the culture, the working culture of these tech companies seems to also be changing. Is it just, again, the media talking about these things, or have you seen companies actually change the way that they operate, change the way that they hire, change the way that they influence?
I actually, just with all my friends and colleagues that I've been working with in China for so many years, I mean, obviously, like the culture 996 is so tough, but I, this is purely from my own personal experience. I don't think any of them can help it. Um, and for the last year and 18 months, I haven't been back. Every single conversation that I have with my Chinese colleague, they literally still get things done overnight. I actually do think that, as there's actually rules and laws that put into place to sort of prevent this, I'm half joking, but if they really cannot do 996, I don't know what they would do with themselves. And then might maybe play with their kids. But it's just so ingrained in the Chinese culture to work hard to get things done. But it is changing. And mostly, I think the most important thing, which I've been noticing, is a couple things. One is more and more, even at the startup level, are actually more proactively hiring people to take care of government relations, because there's all these various different policies that you really need to stay on top of it. You can't really cut corners anymore, regardless as for the 996 or for data privacy. I actually have a friend that used to work in the US, in the Chinese consulate here in San Francisco. After she went back, working for the government, joined Lenovo, and now switched to a startup. Her expertise is all about government relations. And I think this is definitely a trend that all the startups need to be more aware, especially if you're in the area doing hardware or data or communications, just something that you definitely need to understand. On a different note, one of my companies went IPO last year is Agora.io. And a large percentage of their customers are education. And now, obviously, there's definitely a lot of things going on in the education space. But as a startup, you just need to have to deal with it. There's nothing, what are you going to do? Stop operating? Never going to be. I think one good thing about Chinese entrepreneurs and founders, they're super adaptable. If there's no way, there's always find a way. And you know what? If I have to comply, I have to comply. This is how you do business in China. It never changed, but now it's just, we are so much aware of it because now the world is all in China. So it seems like there's a lot of things happening. But I think the BAT of the world always need to understand that they need to comply. There's no doubt about that.
So back to the title of this panel, which is Succeeding in China. How do we succeed? How do investors succeed? How do companies succeed? We're talking mostly to a non-Chinese international audience at this event. So I want to wrap up with that very broad question after having dug into the changing environment because of geopolitical tensions and competition, because of new domestic policies and therefore regulation, because of changing corporate cultures as well. I'm going to stay with Edith, and then we'll go to Charles and end with Ray. What does it take now to succeed? Have the conditions of success really changed in the Chinese tech industry? How should international investors be thinking about China tech? Or is it just all these things, as Edith, you mentioned, that have always been there coming to the forefront because everyone's eyes are on this massive, massive country and industry?
Even though obviously it depends. So forget about, well, obviously you should read SEMP. They're amazing. Love Gary's team and all the news media. But the reality is some of the conversation I have with US investor and versus European and versus Middle East, they are actually still very, very bullish about China market. And I wanted to point out one thing. Obviously, this is not necessarily startup per se, and they have a lot of resources. But in 2020, PayPal acquired a company and now operating in China. BlackRock, Citibank, Goldman Sachs, HSBC, Morgan Stanley, all of them actually now have license to operate in China. It is sometimes cultural differences and the media will get people really scared. But the reality is this is one huge market that no one can ignore. Doesn't matter you're a startup or you're big banks or investors from all over the world. So me, even though sitting in San Francisco, I can't wait to come back to Hong Kong and visit all my friends in China. I think China is a very exciting market, but it's something that we definitely need to take everything, particular government regulations, with care and be super careful. But it's something that China is still, I think, future of technology and then future for many, many investments.
Charles.
Yeah, I think I agree with that sentiment. I think I'm also exploring and traveling a very different journey now. Having worked at high finance for all these years, running the exchange, and I increasingly find the traditional capital market model, is no longer necessarily the only model that can work. And China could pioneer a very different set of development prospect. Essentially, the old market is that we have 2,000 companies listed in Hong Kong after 50 years, and US, after 200 years, still have only just the 4,000 companies. So the proposition is, why can we not have 10 million little companies to be listed, but just have to think differently today? And the traditional market model of concentrating everything, making a company big enough, and then we start to list them because we need entire Wall Street establishment to do all the transparency, disclosure, and risk management and everything. That requires company to be big enough. So that's why we always talk about IPOs, always talk about all these listings. But in the end, the whole world is all about small trees, is about small plants. Only a few trees will reach the sky, like the redwood in the US. So the market need to really go down to China, to the base level, and actually think finally China today is ready to be the first big market for us to think about barbershops, restaurants, mechanic shops, little convenience stores, pharmacies, small pharmacies in chains. All of these are now completely investable. And I'm taking inspiration from the agricultural success of the Middle East. They don't have any rain, they don't have any surface water, but they now become very big exporters of fruits and flowers to Europe. How did I do that? Drip irrigation, because they're building the small tubes to the roots of the plants. Think of that in China today. China is the only market today that every little shop is connected digitally. And most importantly, every little shop's revenue is connected digitally. And very important, even more than that, is that larger numbers of them, potentially millions and tens of millions of them, can have a little, what I call a little arm on that revenue tube called an automated repayment mechanism, meaning somebody can actually deduct revenue from the little guy because the revenue is coming through the tube. So the new finance model for the little guy, none of them will ever become big giant trees, but they're all going to be great, healthy, huge blue ocean of investment opportunity that are entirely cash flow, stable cash flow based. And so finding a way to finance them, finding a way to invest them, and to be able to directly list their cash flows, directly deducting from the revenues as a direct repayment mechanism, rather than going through all the listings and all the shareholders, because you cost it effectively. The only way to do it is digitally, to actually create a new market where you invest through the tubes, but you're collecting from the tubes directly from the revenue, and then listing that cash flow. That will be the new way of doing things in China. And I'm starting a company called MicroConnect, and I think over time we will be back and hopefully listing 1 million companies on the platform, because you're able to see their cash flow every single day in real time. And that's how future investment should be. Investing huge numbers of small investment individually, and that's where the real economy is. That's where the deep soil is. In the past, that is not possible. Capital just couldn't reach all the little guys, and because you couldn't really manage a collection process. Today, that becoming entirely doable, essentially a reverse of insurance model, that we are investing in huge numbers, Some of them invariably will fail, but as long as the surviving portfolio give you a tremendously diversified and uncorrelated returns of small little cash flows in millions, that will be the kind of capital market that will bring solid cash flows directly from the bottom of the roots, and then that ultimately will make capital market a lot more easier, a lot more stable, and a lot less kind of jumpy at any given moment, because we're back to basics of cash flows.
Very interesting new ecosystem there, Charles. And Ray, what are your thoughts here on the future success or succeeding in China?
I guess I have two observations to make. One is, so if you're a foreign company going into China, I think, as Edith and Charles have already said, and as you probably already know, China is like one of the largest economies in the world, but also super highly digitized. So whatever you're trying to sell, you're going to be able to find a market there. And especially as the middle class develops, hundreds of millions of people. I remember being very surprised. I think it was last year, or maybe it was the year before, watching an Alibaba Singles Day promotional video, and it had Magic Johnson, and Magic Johnson was selling CBD oil on Taobao live stream. And that was just something I just never expected to see on Taobao. But there he was, and he was explaining that this has become a bestseller for that category because he had used his celebrity to promote it. But again, it's a product I did not think that Chinese people were necessarily so driven to buy. And the reverse, though, would be, the caveat would be, no matter who you are in China, no matter where you're operating in the world, recognize that Chinese brands are coming for the global market, right? So they're not content with staying in China. That is across the board, no matter what industry entrepreneur I talk to, whether they're in hardware or enterprise software or gaming or physical consumer products, everyone wants to be a global brand. There is this very high confidence in China that this decade is like the 70s of Japan, and that they're on the cusp of creating all these really global companies, not just, a ByteDance or a Xiaomi, but like a whole crop, dozens, hundreds of global companies. And as we mentioned earlier in this conversation, it's not just the US and Europe for grabs, there's the entire emerging economies. So I would say, no matter who you are, whether you're an established brand with significant business in China, you probably find yourself against a lot of new local competition. And even if you have nothing to do with China and you're just sitting here, I don't know, selling your CBD oil in LA, you might find that some Chinese entrepreneur will say like, hey, CBD oil is selling really great in China. Now I'm going to figure out how to make it and then export it globally. So you'll find, I think, traces of Chinese entrepreneurialism wherever you are in every segment of the economy.
Thank you for that. So as we move into 2022 and beyond, there is still uncertainty. There's uncertainty in regulation. There's uncertainty in geopolitical tension. There's uncertainty on how we're going to recover from this global pandemic and when the global borders will once again open. But our panel of experts here seems to have a shared optimism for China, Chinese tech companies, and the success of Chinese tech companies, not only domestically, but internationally. And certainly they're optimistic about the relevance of the Chinese tech industry for investors and consumers all around the world. I think if I've heard correctly, the one key recommendation that all these three experts have given us is that we should read a lot, get behind the headlines, and really understand what is beyond sensationalism, what is actually happening in this massive marketplace. And in those details, we will find opportunities for growth and for investment in the future. So thank you so much again to Charles Lee, to Edith Yuen, to Ray Ma, and to all of the viewers here at London Tech Week. I hope you guys have a great conference and good luck for the future.
Thank you.
Thank you.